Good morning, everyone. Sorry, no, I'm a little late here. But, let's go through this, see where things are at. Good morning, good morning. So markets are down a little bit here. Yesterday, they dipped down and came back again. So obviously uptrend day by day, bar by bar. Futures are down a little bit. So I'm thinking, maybe a little consolidation days ahead of us here. There's nothing really to suggest anything more than that at the moment. So, line in the sand always starts with the prior day's low and the prior day's high. And then we go from there. And so right now we're just chopping, pretty much looks like inside the range, looking at the spiders here. Good morning. So neutral, and that's why I'm thinking, maybe just a consolidation day. The gap up, multiple day running, another gap up, unfilled gaps below. And so as prices run like this, just like they did here or here, not to expect pullbacks, one-day pullbacks like that, or even multiple-day pullbacks like that. Definitely possible. We really never know. But any pullback just seems like it would be likely after the gaps and run. However, if it can go sideways for a couple of days, I think that just opens up the door to push up to those all-time highs up there. So just going through the markets, seeing where they're at. The Q's the same thing. As you can see, they're down here a little bit. There's this whipsaw here an hour or so ago as they attempted to go up. So looks like there's sellers lurking up above, looking to take profits. That doesn't reverse a trend. You can see here's the major support pivot line here. And of course, that would break the trend. But as we always do, the deeper the retracement toward that level, the greater the possibility of violating the trend. It's common sense. So it's not a pivot here. This dip down here was last Thursday, which I mentioned yesterday and in the letters, to use that as a reference point prior to that swing, because it's pretty far away. And as long as it stays above last Thursday's low, overall, the assumption is that this is just a consolidation and it's going to go higher. The Russell, they actually took out that swing high, major resistance. The next one is just up above, which historically just leads to choppy price action between here and here, especially after a run like that. So conclusion, looking at another market, is that consolidation just makes sense. So, as we go through today, as yesterday for the most part, where you always can find something that's moving. When the markets are moving in unison with some momentum, it's just a lot easier to find stocks that are moving with momentum versus, like here, an inside day. Well, not quite inside, but the body was inside, where things are choppy. As the uncertainty increases after a run, as day traders, potentially we're going to get more chopped up. So just keep that in mind. And there's always looking for the best quality setups to avoid that. Transports, came back strong, took out resistance. We've got this chop over a few days, and same story, right? Sideways consolidation, choppy price action. So, and the Dow, Boeing affecting it more so than what's happening in the broader markets that underperforming. And you can see it's down here. Look at 292, actually down below yesterday's low. So we got to keep an eye and see how much this continues to deteriorate versus the other markets. Maybe it's just, Boeing is down. I saw it in the list here, down almost 3.5. So that's pulling it down. And we'll see how far it goes. And, you're looking at the futures, you can see the retracement. So, as we look at futures versus ETFs, because we see the 24-hour trading, it begins to take on a different picture at times. So looking at this bar, which is nowhere near, it's just getting started, so it's nowhere near complete, but we would have a short-term bearish pattern. This consolidation, that prices retraced all the way back down to the low of a bottoming tail bar. So we'll see where this closes at the end of the day. Qs, same story, uptrend, pullback, new high, and let me get a new line here. Yeah. Well, this was already tested a little bit. You can see the bottoming tail bar. This area is where you'd want to see this stay within any consolidation or chop that's going to be going on here. It breaks below here. Now there's really nothing to stop it from going down. And, the majorities will now look at the 20 MA, this unfilled gap, or whatever other levels between there that, they might be looking at. Dow futures, same story, So sometimes we see markets across the board giving us the same message. And like we're right now suggesting consolidation of some degree based on that run up. And when you see that, you can pretty much count on that. That's what's going to happen unless some news comes out. Earnings are starting. I don't think there's anything of significance right now, but as we get into the end of the week, there's going to be several financials, and that'll be the focus. Now bonds starting to turn around here. So if bonds start going up, and you can see that they are, right? This is going to have a negative effect on the market short term. Now, if this chops around, that's what I wrote in the letter, that would be okay for the markets. They're not going to pay much attention to some chop here. But if they start to accelerate higher from here, I think, just based on how they react positively, negatively, and so on, you're going to see this pullback, this consolidation start turning into a pullback. So keep an eye on that. You don't have the futures. Just look at TLT. And just set an alert up here. You can see they're moving up, and just be aware, if they're moving up here and you're looking for longs, unless something's really on its own page, as we say, probably not going to make much headway. If TLT is going up and S&P is coming down, or the Qs are coming down, and maybe it's better that intraday anyway, we look for extended things to short intraday, or things that are well underperforming that may be bounced up during the market advance that might be sell setups on the daily chart. Gold continues to recover. It was saved here. And I pointed out this bottoming tail bar that took out the lows and sprung back up yesterday. So that was a good sign that you always want to see. And whatever it is that you're looking at, when something retests a prior low, as gold did. And oil just continues its march higher, got through the 200, consolidated above it. Here, the next whole number, $65, backing off here a little bit. And you can see on the weekly chart, this minor support level, which is focused on, but in reality, there's really nothing there to the left. However, just technical analysis being taught the wrong or right of it, however it's done. This is something that, while subjective, enough people to look at it as a reference point, and this whole number where it's backing off from there. So this still looks like it's going to go higher. And energy, this got to get through the 200. That was a bunch of questions that we got yesterday in emails, and it was even mentioned in the room at XLE. Backing off a bit, the 200 is up there, and sure, everybody sees it, and everybody looks at that as at a significant reference point, but it has been consolidating here for about 6 weeks or so, and the breakout suggests that while that's maybe a stall point, it should be able to get through it, especially with the oil acting as bullishly as it has all this time. So that's it from me. I know it's late. I'm going to turn it over to Dan so he can cover open positions.
All right, good morning, everyone. Actually, we don't have any problem children at all, so I'm going to go right to gappers first, unless somebody has a specific question on an open. And I posted Mercy last night. No, not Mercy. Which one? We'll get to it in a second. Manpower. Yeah, we found that in our afternoon scanning. That looks fantastic. But back to gappers here. I don't know if calm here is real. It was a long watch for us, and I canceled it yesterday, deep retracement. But if it were to gap up to 106, then that would then be a tier 1 gap setup. SAP here, bearish gap, 111.5. I don't like ADRs, but that's a bear gap. NOW 235. It's right there at the 50, but 30-minute low, a possible call spread candidate. CERN is on fire here today. I got to go to my weekly, and it's way the heck up here, so nothing to do. CLAC, 121 and change. You know, I just mark it off, and it's right there in the midpoint. So it's not a great swing, but it could be a day trade short if it sets up. Markets are still falling here, so that increases the bearish bias, at least for day trades. I just saw this little guy on the ticker today. Another IPO, Tango Whiskey. And like I said, I like IPOs once they set up. Nothing to do with it now. Like Mufasa, 1580. That's gapping too much, nothing to do. 8 core, I just had this in here as a beautiful multiple time frame alignment example. And I think it's well, let me put it back, because I think it's a bio, but it could be a day trade candidate. If we're looking for something weak, there's exhibit A of weakness. Weight Watchers, traders, had some guy telling them to short this. And I mean, look at this monthly. It's a climactic buy setup right here on the prior breakout. Look, it's still in a downtrend and weak, but that's not something I would be buying puts on. CVX, he asked me about. It's one of these oils, and if oil keeps going, it's getting near its destination, though, on the weekly and monthly. I liked XOM yesterday better. It's kind of a, if this would have been lower, it would be a no-brainer 1, 2, 3, but it was still just going. So I like that one better than CVX. But I'm going to leave Weight Watchers here. Let's see if we can do a put spread on it. CAMT, its strength. No setup here. PNR gapping down to 40 bucks. Ooh, that's pain. Look at that. 1, 2, 2.5 months of data is now history for all those people who bought in here and didn't sell. 2.5 months just wiped out. Look on the weekly. 40 bucks here. That's an ugly gap. ZGNX, it kind of has the ring of a biotech. 38. Wow, these guys are having a contest of who has the ugliest gap today. Yeah, we got MT live tomorrow on Trading News. I've been working on the slides. I'll have to put one in about biotechs. SYMC is opening flat. Oh, this came from Trader also. I said, yeah, let's keep an eye on it. Target was left over from yesterday as a 1, 2, 3 watch. So I'm in yesterday's trades now. ANET was strong. Pro, some of those were from traders list that we went through. GTN, we've been watching for a while. It's gapping up here, so that's relative strength to the broader markets. Are selling off right now. So put that one in your long watch list if the market does stabilize. Mercy, though, over the high. I like it. It's at this retracement here. VeriSign, we found yesterday. Hilton, yesterday. UTX, yesterday. UTX over, we said, what's today? Tuesday? So over Friday's high, last week's high. There's a weak animal. Yes, it's extended. Yes, it's greater than 100% retracement, but this daily is just stair-stepping down in weakness. So there's another day trade short watch for you. That is weak. PayPal from yesterday, we said was still strong. ALK over last week's high. PLCE we're in, both a directional and a put spread. Zixi, I like it. You know, it's a deep retracement, so I wouldn't look for a new high, of course. But even 50%, target maybe $8. That's still a watch. Who saw that yesterday, but nothing to do. VSM. That trade's weird, like a buyout. General Electric from yesterday at a bearish gap on a downgrade. That's a new bio. Zulu was strong yesterday, closed weak, nothing to do now. Roku, it's not ready. NBEV was on fire yesterday, nice gap down. Boeing, yeah, that's a bear, you know, that's a Bear Island reversal. And it's, look, 15-minute chart, looks like it's ready to power lower for a day trade right now. Square's a big old mess. AIG coming in. iRobot. All right, now let's go back to my opens here. We have Tilray. We're short the $58 puts, so we're $2 in the money on those. In the money meaning a bad thing in terms of capping our gains, but a good thing in terms of we call it the right direction and it's profitable. Let me see about closing a third right now of Tilray, which would mean you got to buy back the puts too. But if we've sucked out the meat of the time decay, so say we can buy those puts back at 250. I won't do it yet, but that's what I'm kind of thinking. Spiders, yep, that's a bear gap down. So now I'm, based on the pre-market action, I got a day trade short bias. Same here. We can now start looking for some call spreads. Facebook is the leading FANG right now. We have Apple and Amazon put spreads, and they both look fine. Apple, I'm just going to move stop break even. We should be close to 50% profit here in one day. Let me check. $28. We're to the penny of 50% profit, but it's acting so well. You know what? I'd rather just move stop to today's low and let's try to milk out some more. Oh, I'm looking at Amazon, sorry. It looks great, same. Looks fantastic. Remember we had a nice analysis on that yesterday of why it was not extended even though it was up 5 green bars. There you go, Greg. There's another MT live. I love it. When, we can even call it this, it has a nice ring to it. When 5 green bars is not overbought. I like it. Am I talking to myself again? Yeah, I'm just going to move stop to the day's low since the market's weak. All right, our Avgo and iRobot still haven't hit, so that's good. We don't want them to hit in a weak market. All right, cool, Michael. I don't mind talking to myself either. All right, Amazon's fine. Place. It's fine for the put spread. Let's see if we can leg into a covered call on the directional. It's spreading, but yeah, let's try to sell the 103s for like 90 cents is a little less than midpoint. Because I don't think the jerk will fill us at midpoint. Yeah, we got a nice on the Qs. Qs actually are green above the open. So Qs relative strength, just like yesterday. Must be with those fangs again. Yeah, we kept it. We kept Amazon and Apple. They look good. Going through other opens here. All right, FCX is not having a good day, but nothing to do. CMG was on the watch list for yesterday, being strong. Avgo never hit. C Trader, you see why I was so picky about the entry on that one? OIS, we're not in, but now I have no interest. CRC, we are in, and we're in FT. Yeah, a lot of these oils coming in and now. Look at the sectors. XOP. Oil itself, though, just like on the recent rallies, is holding up better than the ETFs. All right, no worries, Michael. iRobot